Hi traders, and welcome to our webinar today. My name is Nenad and we will do Fibonacci trading methods. So I will show you two Fibonacci trading methods that you can apply to your trading and that you might use in everyday trading routine. So this is something that is also suitable for both beginner traders and both experienced traders, and it doesn't require a lot of practice, but well, as always, it might require some screening time from you so you can actually spot these setups. So how to use these Fibonacci tools and what are they? We will go with the first one. It's called Fibonacci fan, and everything you need to do is to know about the trend and retracement and spot highs and lows. I will show you now how you can trade this method. You need to have three Fibonacci levels and retracements on your tool. It's 38.2, 50, and 61.8. And you can do it easily with your default MetaTrader 4, because every MetaTrader 4 has actually these tools built in, so you shouldn't have any problems. Okay, so before we start, let me just show you the screen. Okay, and we'll show you how you can actually use this Fibonacci fan trading method. Okay, let's do it here. And you can actually remove, this is default template on every MT4, so you can remove all of this and leave basically it as it is. I use this method from time to time to confirm my counter trend trades, and usually I use it also on 4-hour time frame trading. So we will switch here to 4-hour time frame. Okay, so before you actually start using this method, you need to check if everything is correct. Fibonacci fan, it's here, and you need to be able to spot highs and lows. Now guys, if you are novice traders and you don't know what Fibonacci tools are and what support and resistance levels are, swings, highs and lows, there are a lot of tutorial videos on the internet that actually can show you all these things that I'm talking about now. So basically I will cut to the chase and I will go straight to the point. So one quick advice: if you cannot spot highs and lows, then you can easily use fractal indicator from Bill Williams. So if you go here, insert indicators, Bill Williams, and fractals, you see these are fractals, and they basically mark also swings, highs and lows. I can do it without it, but as I'm saying, if you are a novice trader, maybe you are not able to spot it, then put this and it will be much easier. So how to spot and how to trade this method: you need to put Fibonacci from high to low when price is in a downtrend, and always go from left to right. So if you go to insert here, Fibonacci fan, you need to put it from left to right, always guys, from left to right, and you will see the fan. So let's see that this was the actual swing. Okay, so this was the actual swing, and you mark it here. Okay, now you wait for the price to break 38.2. okay, when price breaks 38.2, you enter a trade. Okay, so this is a breakout. Your stop loss can be either aggressive or conservative. With aggressive stop loss, okay, you put it 2 pips plus the 5 pips plus the spread, because we are trading on 4-hour time frame, below the current candle. So your stop loss, if you enter here, should be below this point. It would be like 33, 35 pips. If you go with conservative stop loss, then your stop loss should be around 70 pips below the low that is marked with your Fibonacci fan. Your target is always same, 61.8. So you don't use anything except Fibonacci fan, 61.8. And you see, if you had put the stop loss here, you would have been stopped out. If you had put it here, then you would have been in a profit. Okay, same for this entry. Okay, same here. You have this entry here too, 38.2 reached, broken, and 61.8 also has been reached. Now, I also, from time to time, I also add 78.6 and 88.6 in the equation. So if I go to objects list and put Fibonacci pen here and Fibo levels, I can also add 78.6 like this, okay, and 88.6. Because sometimes, guys, when trend is strong, the price will reach these levels. And you can see that, as you can see from my example, 78.6 was almost reached. So how to measure the trend strength, how to measure if the price will actually go further up, proceed up. You need to use your own tools, your own assessment as a trader. But when I see these candles, strong momentum candles, then retracement, and then again strong momentum candles, I somehow know that the trend will actually proceed to the upside, because there was no follow-up from this drop here. And you can see how price respects these levels. So it's easy to do this. You just need to mark swings, highs and lows, and it will be easy for you. When price is in uptrend, you need to draw Fibonacci. Okay, same thing. Okay, guys. Okay, when price is going up, always from left to right. Okay, you see here the price has broken 38.6. Okay, here the price dropped almost to 61.8, well, few pips here and there, and then it proceeded to the upside. So this is purely counter trend trading, guys. You don't go with a trend, you are trading counter trend. So counter trend, price broken, and bang, almost, you see, it almost hit 61.8. Okay, it then proceeded to the next level. You always use the same lows, but if the price is still going up, you just move it with highs. Here you would have been stopped out. Then here there wasn't, the price hasn't qualified. Here you would have been in profit. You see 38.2, straight to 61.8, straight to 78.6. And very often the price will reach 61.8 and even 78.6, but because this is a strong level, it will probably, and not probably, but very, very often, if there is no big counter trend momentum, it will reject from 78.6. Now you need also to have in mind regarding risk reward. So if this was your entry here, okay, your stop loss is still like 75 pips. Your final target is 65 pips. You can do it, but you need to know that your risk should be predetermined. Do not risk more than 3% on each position. If you're a novice trader, I advise you to risk in between 0.5 and 2% per trade. Especially if you're new, then, well, maybe 1.5% fixed risk is what you should do. So have in mind that your stop loss is dynamic thing, but your risk, especially as I'm saying, if you are a novice trader, your stop loss should be fixed. So not stop loss, sorry, but your risk should be fixed. So stop loss is dynamic, it depends on the market, but your risk does not depend on the market, because you are trading the risk. So you need to know what is your biggest risk that you can actually take. And I advise you, if you're a new trader, do not go with more than 1.5%. Usually I go with 3%, but as I'm saying, if you're a new trader, do not go with 1.5. It's the maximum. Okay. Now, regarding other time frames, you can also do it for, let's say, some scalp trades. You can use also these lower time frames, but have in mind that the lower time frames, you might have some, well, I can say, wicked price action. It's not that you will always hit the target. Maybe you will have more losses. That is why I'm going with bigger trades. You see this one, for example, 31.8, and it reached 61.8, but the number of pips, guys, is, well, it's only 5-6 pips. So that is why I'm saying it's best to be used on, let's say, higher time frames, like 4-hour time frame is good. For me, 4-hour time frame is always a good choice. If you have any questions, guys, and you didn't understand this, I can repeat. Just ask me. If not, then we can proceed to next trading method that I have personally developed. It's called high volatility trading. It's a part of my Camarilla MACD course, and it's a bonus module. So thanks to Forex Street, you can also see this now. So high volatility trading, one of my personal trading methods that I also trade from time to time. I like to do it, and I think it has a good potential. But as I'm saying, you need to be able to spot the trade. Sometimes it will require patience and well, focus on your charts. Definitely, guys, pay attention to that. Now let me show you. I will do the same thing. Let's say we can open the GBP dollar, for example. It's very nasty, this GBP dollar, but as I'm saying, it's how it goes because of the Brexit. You need to have momentum candles. Now, before I actually do, let me explain how it goes. HVT stands for high volatility trading. We always have a trend, retracement, and reversal. It's the part of a trend. Trended retracements are a part of a trend, and when there is at the end of the trend, there is usually an impending reversal. For that to happen, we always need to be able to spot good momentum. With these naked trading principles, we spot it with Marubozu candle. Now, let me define what Marubozu candle is. It's high volatility candle. On 1 hour chart, it has to have a minimum of 25 pips from high to low, okay, or low to high, doesn't matter. It needs to have minimum 25 pips. On 4-hour chart, it should be minimum 45 pips. And then basically you need to spot momentum candles, Marubozu candles like this one. Okay, so this is white closing Marubozu. It has a small shadow to the downside. There is a white opening Marubozu. It has a small wick to the upside, and it has a white Marubozu candle completely without any shadow. When you spot this can also be bearish, guys. Then we trade it. So these are bullish high volatility candles. These are bearish high volatility candles. When you spot these, guys, you need to be able to trade it, and you need to be able to define again a perfect range for these candles. Now, we use 61.8, 78.6, and 88.6 retracements. And we always plot Fibonacci from left to right. Why I'm saying, guys, from left to right? Let me clear something out. Because, guys, when you put Fibonacci, now we don't use fan, we use Fibonacci retracement tool. Okay, past plus present will give you the future outcome. 1 plus 1 equals 2. 1 plus 2 equals 3. 2 plus 3 equals 5. 3 plus 5 equals 8, and so on. Past and present will give you the future. It's how Fibonacci numbers, it's how I see Fibonacci numbers. 1 plus 2, 1 is past, 2 is present, 3 is future outcome. 2 plus 3 equals 5. 2 is past, 3 is present, 5 equals future outcome. Same here, guys. You want to spot the future outcome by setting your traps to the exact Fibonacci ratios. So for this, you go to objects list, Fibonacci, edit. You don't need these levels. Okay, you don't need these. Okay, but I advise you to use it, guys. Okay, why? Because you will be adding 78.6, 88.6, and your targets will be Fibonacci retracements. So we don't trade these 23, 38, 50. We trade only 61.8, 78, and 88.6. So let's do it this way. You go here, okay? You can change the color, whatever you want. You don't need this one. You don't need this one. You don't need this one. All you need is to add 0.786 and 70.6 and 0.886, 88.6, okay? And let's say you need to spot Marubozu candle. This is, guys, Marubozu candle. This one. Does it have 45 pips? Definitely it has more than 45 pips. Okay. Now, how I trade it? Put Fibonacci retracement. Okay. This candle has been broken to the downside. You can have one, maximally 3 candles broken. Then if this is the fact, then you need to just put it a little bit lower. And you wait for retracement. You see, the price retraced to 61.8. You make your entry and your next target is 2 Fibonacci levels below or above your entry point. So if we are short, our target is 38.6. Now, guys, what is also important? Sometimes you will see that price retraces to 78 and 88.6. If this happens, guys, okay, then you need to add, because you're trading with a predetermined risk, you need always to calculate your risk in this form. So let's say that your risk is 0.3 lots. So you divide 0.1 lots here, 0.1 lot here, 0.1 lot here. Your stop loss is 5 pips above this candle where you put your Fibonacci. So my first entry would have been here, but because the price didn't retrace to the upside, I would have traded only with 0.1 lot if my risk was 0.3 total. You see? And the target is hit. Sometimes it will be too big, you see? But have in mind, guys, that as I said on the beginning, if your stop loss is 120 pips, you can always put 1.5% of risk in 120 pips stop loss. Instead of trading, let's say 1 lot, you will be trading 0.1 lot, right? So, but the advantage of this is, had the price retraced to 78 and 88, I would have had 2 more entries. So here my stop loss, you see, and my profits would exponentially go. You see, had the price retraced to this point here. Okay, sometimes, guys, you will see that candles are not broken always like instantly, but sometimes they will be broken instantly. For example, this candle here, it's not, well, let's see how big it is. I think it's not 45 pips. Yeah, it's only 30 pips. But let's say that you have a candle like this one, okay? This is pure Marubozu candle, and this is where the candle has been broken. You neglect this swing low. You don't care about this. You put Fibonacci retracement, as I said, here. Okay, your entries, 61.8, 78, 88.6. Your stop loss would never have been hit, and you, now, also important, guys, because you trade with 61.8, your target is 38.2. If your entry has been made with 78.6, you will close your trade at 50. If your entry also has been made at 88.6, you will close your trade at 61.8. So with this entry, we would have made pips here at 61.8 at 50, and also with 38.2. So 3 successful entries with 1 trading method and 1 trading setup. That is why I'm saying that high volatility is good if you can spot it. We have the same situation here. Okay, this is swing low, 3 candles maximum, 1, 2, 3, okay. And what do we have here? It doesn't matter, we neglect these guys, we don't care really about this. We don't care, 3 candles maximum, okay. And again, 61.878, 88.6. Let's see if we have more entries here. Yeah, we don't have any entry here. Okay. Yeah, the price dropped here too low. Here, for example, 61.8 entry. Here, guys, you would have made the profits here. Watch this, how good this is. 61.8 and bang, it went to 38.2 before it proceeded to the upside. You see how good these retracements can be. Straight from 61.8 down to target, and then it proceeded up. So try to find these guys. For example, this could be a chance to go long. For example, I would go long here, definitely. I might say this to my Telegram group. Now, I would, let's just do it for here, here, and there. You see, this is a setup now, and let's see, 61.8 is first entry, 78.6 second, 88.6. Stop loss would be placed below 5 pips below this candle. You see now, guys, let's see, I mean, this could maybe happen, I don't know. Pound is risky, but again, it might happen. If you have any other questions, guys, feel free to ask me. I hope that this is clear. So these are two Fibonacci methods that I wanted to show you, thanks to forex3.com. Any questions, guys, do not hesitate to ask me. tarantulafx@gmail.com. You can also visit our website, elitecurrency.com. We are always willing to help you out and to provide you with clear help regarding forex trading. Okay, we also do our Telegram channel. We have it there, and we have our trading methods, custom developed trading methods. We have my FX book, verified my FX book account for trading. Have in mind, guys, that the results always can be different depending on your risk, on your definitely depending on your risk portfolio, and you can check it everything here. Thanks to forex3.com, guys. You have these modules for free: high volatility trading and Fibonacci fan trading. I hope that you enjoyed. I will talk to you soon. Again, follow me also on forex3.com. I provide a daily analysis. Okay, if you go to forex3.com, you will find my daily analysis, poll, forecasts, and you can always read my analysis here also with forex3.com. For example, today's analysis, euro yen, it came in profit. Let's see if we have it here. Analysis, latest analysis. Yeah, usually it's instant, but you know how I do it. I will show you just quickly, guys, before I say goodbye. I go to Forex3 here, and you see latest content here. Usually it's instant, you see, and unfortunately it hasn't been published today, but all my analysis is published here. Okay, and you can see it. For example, dollar CAD trade, if you follow this analysis a few days ago, well, you could have made 92 pips straight, guys, but I'm sure that you follow me, so I'm not worried. Thank you, guys, for listening. I will talk to you soon. Any question regarding our webinar, go ahead and ask me. I might trade this one, so mark these levels here, and let's see if we will make some money also here during the webinar. Cheers, guys. Talk to you soon. See you next time.